We are recording, so let's explain the R system real quick and the reasoning behind it. Whenever you get into a trade, you always have a stop loss, which is a stop market, not a stop limit, a stop market. And you do this because if you know S curves, a bullish market will make higher lows. Okay. And you are not bearish. So even if we pull down into here, you're not bearish yet. You are bearish, or the bull move is done as soon as the higher low is taken out. Okay. Now that's how you, that's when you know it's like, okay, this bull move is most likely done because the higher low should hold if you're strong, these higher lows. In a bear market, it's the lower high that needs to hold. So these guys right here, the lower highs. If we bounced up into here and did this, that is still not bullish, right? The bear move is not done yet because we haven't taken out the lower high. This is going to be tough. We'll get through this. But if we did something like this, now the bear move is done. Okay, so that's the bullish and the bear move. So knowing the S curves, where do you want to put your stop? How do you know how much money to risk? And how do you know where your target should be to get out? Too many times people are like, I don't know where to exit. And they're asking questions and it just bounces. And they're like, I'm up a lot. And then it goes all the way down. I'm like, oh, I should have just gotten out. How do you know to get out right there? We're going to answer that. And it's all based around the R system. This is how RLT trades, the lingo of RLT. You put a stop in here based on that higher low move. If you're going bullish, right now we're trying to go bullish on Apple. So if we took out this right here, now let's go to a bigger time frame and we'll see what we're talking about. This is a higher low. Check that out. So this should not break if we are bullish. So where does our stop go? Our stop goes where we're wrong, where we're no longer going to go bullish. We're no longer going to go higher. We want this trade to go higher. So our stop needs to be below this area right there, okay? Because this is our higher low. If it's broken, then the bull move that we were trying to catch a piece of is not happening anymore. So that's where your stop goes. Okay, so now that we know where our stop goes, now we need to figure out where our targets go. And this is based on where our stop is. So pay attention to this risk-reward ratio. This 1.29. So our 1R target. Why do we use 1R and 2R? So this is one-to-one risk right now. So I am risking this amount of space to make that amount. So if my R was, let's say my R, which is my risk, is $200. That means that I would plug it into my little calculator, right? And say, if this is where my stop is at 122.90 and I'm getting in at 123.30, the difference, this needs to be a $200 loss wherever this is, right? So then I figure out how many shares that is. And once I know how many shares that is, so if I know that I'm losing $200 here, that means I know I'm going to make $200 right here. This is my one-to-one. Okay. Next part, we're always trying to do a 2-to-1 win. So we are trying to win twice as much as we are risking. So where is our 2R? Right there. 124.25 is our 2R. So I would set that as a target. Target 2 for the rest. Right. And then our target 1, I'll make a target back on target 1 here. So in your broker, in your OCO order cancels order, you are going to have a target, a limit exit there for a certain amount of shares. Normally I do about 10% at target 1, give or take. I'll change it depending on the setup. I'll do 10% there and I'll do the rest. So 90% there. And why am I taking 10% off? Because when I take shares off for a win, it reduces my risk. So now it's not possible for me to lose $200 if I took 10% off here. Now my R is less, right? I have less on the table because I took some profits early. And that's why I take 1R, because I don't know if we're going to bounce up into here and then be done. So this is a way for me to mitigate some risk and still take some profits. And I'm hoping that we come around and then bounce and go to that 2R target. Why do we need to do a 2-to-1? What's the whole point of that? The whole point of this, most traders, day traders, have around a 40 to 50% win rate, which means most professional traders will lose on more trades than they win on. It's very rare to find someone that has like an 80% win rate unless they're a scalper. They are out there. Reed says, so you can only win 40% of the time and still be profitable if you do it a 1-to-1. So that's exactly what we're getting to. So if we're going to lose on more trades than we're going to win on, if we only did a 1-to-1, we are not profitable. We'll be losing traders. The only way to make money when you lose on more trades than you win on is to win more money on your winning trades and lose less money on your losing trades. That's the only way you can be profitable. So the 2-to-1 ratio allows us to still have like a 42% win rate, which means we lose on more trades than we win, but still be profitable P&L wise overall, over 100 trades, right? We're not taking 3 trades. It's that flipping of the coin. If you're flipping the coin, it's going to be heads or tails. You're either going to win or lose. But if you win $20 every time it hits tails and you lose $10 every time it hits heads, you will be a profitable trader over 100 coin flips. Maybe not in 5 coin flips, but in 100. So that's the whole reasoning why we have a 2R trade, is because most traders will not win more than 50% of their trades on day trades. That's why it's so important to back trade. Back trade your strategy so that you can figure out what your win-loss percentage is, so that you can understand what my plan needs to do. If you have a 60% win-loss percentage and you've back traded 1,000 times your strategy, the exact strategy that you do, then you can afford to do a little bit more at 1R, because you are percentage-wise, you win on more trades than you lose on, which would be amazing. That's awesome. Most day traders don't. Most day traders lose on more trades than they win. So the R system is simply your risk. And this is what your risk will tell you what your targets are at and what they will be. How do you calculate the investment amount? What is your average? Andre's 3% risk is the most you should put onto a trade. 3% of your entire account. That's the most. I day trade with like 0.05% of my account. Very tiny. Not too many traders actually have 3%. All the new traders put like 30% of their account on each trade, right? That's why they're freaking out so much. That's why they're like, oh, I got to move my stop up in 3 seconds because I'm losing like $20,000. So, yeah, you want to make sure that you have a comfortable risk, that you are comfortable taking a trade on, so that you accept the risk. You're totally fine. If you risk $10, would you care if you lost on this trade? Probably not. If you had about $5,000 on this one trade, you would probably stress. Your heartbeat would be high. That's way too high. So you trade at a level that you're comfortable with so that you can actually allow the trade to work. Because if you're scared that the trade will not work, it won't work. You'll screw it up. You could have a profitable setup and a profitable system that you've back traded and know is profitable, but you'll go in there and screw it up. This is the R system. The R system is basically your risk. So you have a defined point, and everyone has a different risk. Some people have a $20,000 R. Some people have a $1,000 R. Most people I know trade with about a $200 R. So that's what makes them comfortable. Okay. So a $200 R. And so wherever your stop is, what changes is how many shares you buy or short, depending on your direction, where you're stopped. So I know my stop needs to be down here. So I'm going to go ahead and do that. And I plug this in. And I do a little bit of math, and I say, this is my entry, this is where my stop is, and then how many shares do I need to get in order to lose my R at my stop? And then that, wherever your stop is exactly where your targets go. That's how you set your targets, is based off of your stops. So that is the R system, and that's why you do 2R targets, because most of us are not over 50% in our win rate. So we have to win more than we lose, money-wise, because the number of losses will be more than our number of wins. All right, that is it. Quick explanation. I'm Tony. We'll see you.